Hello everyone, this is Justin Smythe from nextbigtrade.com. This is the index review for February 13th, 2026. The S&P 500 closed lower over 1% to the downside for the week this past week and appears to be in week 3 now of a correction that started right at the end of January. The S&P 500 has obviously been in a very choppy sideways trading range over the last couple weeks now, but closed below the important 10-week moving average this week. This is the first time a close below that moving average has happened since the November 2025 correction bottom, and is only the second time the S&P 500 has closed below that moving average since all the way back at the end of the April 2025 bear market. So just shows how strong the trend higher was out of that 2025 bear market low. But you can see how the market just continues to kind of roll over here. And, I think there's some big warning signs in this market right now, and I think it definitely has room to accelerate to the downside. One of the warning signs is the heavy volume that's occurring on the downside here. This is the biggest selling pressure we've seen since that 2025 bear market erupted, and there was plenty, warning signs before that bear market started. There was some big volume selling in February, and then the volume really erupted to the downside in late February, early March, and just kind of kicked off the bear market, and then we really had the plunge at the end of that bear market. And again, this is the same type of heavy downside volume breaking the 10-week moving average now, and we'll see what happens over the next couple of weeks, but bears definitely have control of this market right now. Moving to the daily chart, you can see, some of the selling pressure showing up on the daily chart as well. Big downside volume. Clusters of heavy downside volume are kind of what typically kick off bearish periods after you see a bullish period in the market, and that's basically what we're seeing right now. The market continues to get up to this resistance and then fails. And, the S&P 500 closed below short-term and one of the long-term moving averages now this week, and is sitting right at support to end the week. So definitely not looking good here. And, we'll see that in the other major indices as well. The NASDAQ 100, looking very poor, continues to look poor. Daily chart, this one closed, right on top of that 150-day or 30-week moving average. And, one of the weakest indices out there with mega cap tech under significant selling pressure. So unable to rally. You can see how it found the 50-day moving average as resistance this week. Thursday sold off on heavy volume. Then Friday was really unable to rally or hold on to some gains. And, again, this continues to look poor here and is probably heading lower. NASDAQ Composite also, selling off on heavy volume, one of the worst performing indices of the week. Daily chart, this one's sitting right on top of that 30-week moving average, underperforming the S&P 500. Russell 2000, this is where, the majority of the strength has been, but now you've got 3 weeks in a row, or 3 out of the last 4 weeks of above average downside volume, really having problems getting above resistance here, seeing the market get rejected for multiple weeks in a row. And on the daily, you can see this one tried to push up earlier in the week, but sold off on Wednesday and Thursday, and then, rallied a little bit back on Friday, but now it's closing just above that 20-day moving average, and starting to show some relative strength weakness too now against the S&P 500. And then the equal weight S&P 500, where there's been strength as well as the market's rotated into more defensive sectors. This one closed off the highs of the week, and you could kind of interpret this as some bears finally taking control of this index as some heavy volume selling came into this ETF on Thursday. Some of the biggest downside volume since the November correction was ongoing. So some big selling pressure in RSP this week. And, this might have put in a top on Thursday of this past week. And then looking at breadth, another reason to be negative on this market, nowhere near levels that we've seen bottoms at, whether it's the November correction or when we get to these oversold levels, like at the start of 2025 and then the bear market. So we've got plenty of room to move lower, as most stocks are actually still above the 50-day moving average and the S&P 500 isn't. So this shows you how the market has stayed elevated by so much rotation into all the defensive stuff and all the stuff that was underperformed. But now that it's already done that, the market has room to move lower now because, mega cap tech is leading on the downside. And then short-term breadth also elevated here. This is also, dangerous. I think the S&P 500 could have a pretty negative week next week, breaking through support. So many stocks are still overbought and the technicals are deteriorating rapidly. So not a good sign for the S&P 500. Finally, the VIX highest close now since this correction started. The VIX really kind of gave the early warning sign. It started trending higher all the way since the start of the year, and then really started to accelerate to the upside this week. So this could break out above resistance next week, and you could really see this market start to break up down to the downside if we get a VIX breakout next week. So bottom line, this is a market that's just starting to move into a correction. Has been in a correction for a couple of weeks now, and I think things are going to get even worse to the downside here. There's, bearish action in the major indices. There's big volume selling in important leading sectors and former leaders. And then the financials breakdown, which we'll talk about in the sector review, is a major negative for the market as well. So lots of danger signs out there. This is a good time to raise cash. If you haven't already, go heavily into cash, completely into cash, and be defensive, as this market is likely headed for its biggest correction since November 2025.